The world currently carries over $300 trillion in sovereign debt. That's about 3 times what the entire globe earns in a year. And the US alone owes about $36 trillion. Big numbers, right? So the first question that pops into your mind, if every country is in debt, who are they borrowing from? Who's lending to these massive economies? Turns out, debt isn't a straight-line transaction, it's a loop. One nation borrows from another, that nation borrows from a third, and eventually, the money comes back around. People often point fingers at China. Yes, it holds roughly $750 billion in US Treasury bonds. But here's the twist. China itself is deeply in debt on the order of $18 trillion. And most of it is owed to its own banks. And those same banks also buy US bonds. It's like China is lending to the US, while the US is borrowing. And their banks are trading bonds back and forth. But what is a bond? Simply put, it's a written promise. A government or a company says, we'll take your money now and pay you back later with interest. That's a bond. It's both an investment and a way for governments to raise funds. And this isn't just a story about 2 countries. Every nation borrows and lends. The global debt system is like a giant rotating wheel, and it's the engine that keeps the global economy moving. How did this start? Debt isn't new. It's as old as civilization, back when there were no coins. People traded on trust. Hey, I'll pay you after the harvest. As societies grew, kings and empires needed money for wars or palaces, or when taxes weren't enough. So they sold bond-like certificates to the public, first government bonds. People lent to the state in return for a written promise of repayment with interest. That's the origin of modern debt. Then came to world wars, and in 1944, the Bretton Woods Agreement made the US dollar the backbone of global finance. Soon, gold reserves couldn't keep up with growing costs. And in 1971, the US abandoned the gold standard. Dollars were no longer backed by gold, they were backed by trust. That opened the floodgates for debt. Governments could literally print money to fund schools, roads, or bailouts. Today, about 70% of US debt is held by its own citizens, banks, and corporations. The government borrows from its people, citizens deposit savings. Banks use those funds to buy bonds, giving the government a loan. And it's not just the US. In Europe, Japan, Turkey, governments do the same. Insurance firms, pension funds, and mutual funds all lend to governments because they need safe investments. So yes, when we say the world is $300 trillion in debt, it's also true that a huge chunk of that money sits in the hands of individuals, companies, and banks within those countries. Ultimately, debt forms a web tying citizens, banks, and nations together. But is debt necessarily bad? Could a country run without borrowing? Pause for a second. Debt isn't all bad, in fact. Responsibly used debt can be a nation's greatest tool for development. Imagine a government doesn't have enough money right now but urgently needs schools, hospitals, roads, or railways investments that pay off over decades. It can borrow now and repay later through future taxes. That's called productive debt, debt that generates growth. Take Japan, though it has the world's highest debt to GDP ratio. You wouldn't say it's collapsing. Its infrastructure, technology, and quality of life remain high because its debt is largely domestic. And it's been invested in long-term productivity. Or consider Turkey. Recent years saw borrowing to fund infrastructure and digital transformation projects. After the pandemic, Turkey used debt to build highways, improve healthcare, and expand digital services that helped drive growth and modernize the economy. So the real question isn't, is debt good or bad? It's how the debt is used. If funds go to schools, roads, or improving the business environment, debt can skyrocket growth. But if it's spent on handouts, subsidies, or inefficient programs, the country ends up paying interest without real benefit, and debt becomes a burden. There's another dimension. Debt strengthens the bond of trust between governments and citizens. When someone buys government bonds, they're saying, I trust my country to pay me back. And that trust is what keeps economies alive. But when trust breaks, as it did in Sri Lanka or Argentina, governments default, currency collapses, and citizens suffer inflation and hardship. That's why the world's economy rests on a fragile balance. Too much debt is risky, but taking none could stall progress. What's needed is smart debt, well planned, well spent, and future-focused. Our modern world runs on one idea: trust. Trust that if I lend today, I'll be repaid tomorrow. Trust that governments will keep their promises. Trust that the system holds together. As debt grows, so do the questions: can that trust endure? Share your thoughts in the comments.